Ward McCarthy, chief financial economist at Jefferies Company, former senior economist at the Federal Reserve Bank of Richmond. Joe McAlinden, chairman and chief investment officer, Catalpa Capital, former chief investment officer, Morgan Stanley Investment Management, and an unabashed bull, we'll say. We've also got Chris Rupkey, chief financial economist, Bank of Tokyo-Mitsubishi. I want to start with you, Chris Rupkey. I read your note today. According to the data that you're looking at, we're not going into a recession anytime soon in the United States.
Yeah, I couldn't find any data. I mean, I had some that was negative, but I guess I left it back before. Yeah, I mean, at this point, all the data points to things are okay. In fact, I was a little surprised in the testimony today. Fed Chairman Bernanke said some of the indicators like unemployment claims suggested that job growth would be sluggish for some time. I read it just the opposite way. It fell 37,000 last week, 391,000. It doesn't look like, well, it certainly doesn't look like we're going in any recession. I don't even know if it means jobs are going to remain sluggish in the future.
Indeed, in your report, you made mention of Ben Bernanke's report about jobs and said maybe, or you're concerned that maybe he knows something about the jobless report that we don't know.
Well, that's trader lore 101. They're always guessing, does the Fed have the number in advance? The last I heard, they have some components earlier in the week. I don't believe he has payroll jobs until 5 o'clock on Thursday, but maybe that's changed. Maybe he knows.
Ward McCarthy, based on what Chris Rupkey says and based on the data that you're looking at, are we going to go into a recession?
I agree with Chris. I don't think we're headed into a recession. We did see some scary numbers during the summer following the debt downgrade, but they were all confidence numbers. The hard data since that time has stabilized and improved somewhat. The car sales this week were really pretty encouraging, and the manufacturing data continues to point towards continued manufacturing activity. So I think the second half of the year is going to be better than the first half of the year. I wouldn't describe myself as a raging bull, but I do think that we have an economy that is going to continue to muddle through the problems and the obstacles that Washington keeps throwing in front of it.
Joe McAlinden, we've got two economists who say we're not going into a recession in the United States. So why is the stock market seemingly so schizophrenic?
Pimm, when I first came into the business a long time ago, there was a famous quote from Paul Samuelson that the stock market had correctly predicted 9 of the last 5 recessions, and I think that's basically true today with updated numbers. The ratio's about the same. We keep getting these false signals. I mean, the most striking was 1987, where there was a barely perceptible economic consequence to a massive decline in stock prices. So I think this will go down in history as another one of those. Technically, intraday, we have a bear market signal in the S&P. The fact that it's not official, I think, is irrelevant. You've got it in the international markets, emerging markets, and small caps are all down way more than 20%. I think it's a false signal.
Joe, before we talk about Europe, I want to get your thoughts on what's going on with small and mid-cap stocks. I was looking at the stock market action today. The Russell 2000, there was buying going on even when the Dow and the S&P were lower.
Yeah, the Dow and the S&P were red intraday, and the mid-cap index, the small-cap index of S&P, and the Russell were all up strongly before this late-day rally. And I think that it's a signal of a shift in where we're going to go in the big picture in the market. An emerging relative strength, which may have just begun. I mean, one day doesn't make a new market trend. But if you get emerging strength in small cap stocks, it's going to be a very good signal for a healthy rally over the next 3 to 6 months in the overall U.S. market.
Why would people buy small and mid-cap stocks? Because they think that there's decoupling going on, that U.S. companies aren't necessarily going to be affected by what goes on in Europe and any potential downturn in Asia?
Yeah, smaller companies especially are going to be more domestic. And so global companies are, if this thing in Europe pushes Europe into a big economic slowdown or recession, it'll spill over into emerging markets. That's why emerging market stocks and currencies have been hammered all through this experience. And so big global multinationals would be more negatively impacted. But on the U.S. front, you're seeing commercial and industrial loans picking up. You're seeing some signs of a better environment for small companies actually in the U.S. And I think that's a very interesting trade going forward.
Chris Rupkey, why don't people want to look at any of the good news when it comes to the U.S. economy right now?
I don't know, because you wake up in the morning and there's bad news out of Europe. I thought the Greece headlines Sunday night were good, and people said they missed their target by, well, it's supposed to be 6.5%, and then they were going to just be 6.8% or something next year for a budget deficit. I thought that didn't look like that much of a miss, but thank goodness for Europe. I mean, the Bernanke headlines today, I think fixed income traders didn't see anything in it, but you know, the euro went up instantly. They saw the word action, I think, in the headline. He's going to take action, so fine. Sometimes Europe helps.
When a question was put to him during the testimony about the actual amount that he thinks long rates will decline, I think he said about 50 basis points.
That's a big number.
Yeah. So I mean, 30-year bond, 2.75%, somewhere around there right now?
I think you have to treat that as, despite his forecast of 50 basis points. So we were 1.93 when they made the announcement for 10-year yields.
Right.
So we're still around that area. I don't think it's going to go down 50 basis points. I would put it like it was in the press release, that yields will be lower than they otherwise would have been. But we don't know where they're going.
Ward McCarthy, take a look at the U.S. economy. Can we decouple from the rest of the world? I mean, is it possible that stocks, small cap stocks, do well because U.S. companies might be a little bit immune to what happens overseas?
Yes, I do think we can decouple from the rest of the world because of the nature of our economy. They need us more than we need them because we are massive importers. And as a consequence, if we have a slowdown in our consumer spending, it really is that's what we export overseas, is a slower demand for goods. But, you know, what's happened here is that we have made a lot of progress in the U.S. economy. We have seen consumers restructure their balance sheets. Corporations have restructured their balance sheets. Banks are in the process of restructuring their balance sheets, although I think that's a longer-term proposition. And now we're finally getting to the point where at least the voting public would like to see the federal government restructure its balance sheet. And all of this is part of a process of normalization, both of the financial markets and of the economy. And it's not going to happen overnight. We've made a lot of progress, but we still have a long way to go, I think.
All right, so if we've got a long way to go, what areas would you be looking to invest new money right now? Would it be manufacturing in the United States? Are they going to benefit?
Well, I think the types of investments that I would look at is to look at sectors, and Joe's probably got a better idea on this than I do, but look at sectors where all types of firms have been painted with the same brush. You know, the financials have been devastated. There really hasn't been any discerning which companies really have pretty good balance sheets and have a good track record of management and which ones don't. They've all pretty much been hit with the same
What do you think,
brush.
Joe McAlinden? Financials, for example, small regional banks?
I think, first of all, a really interesting data point that didn't get a lot of coverage is that the FDIC is actually shutting some of the temporary offices that were set up to close banks, and bank failures are down. The financial obligations ratio for American consumers is way down.
All right, Chris Rupkey, we look ahead to the employment data report that's coming out the end of the week. What do you think it's going to tell us?
Well, I'm hoping it's going to be a little more than sluggish. I think it's a complicated story because we had 0 jobs last month, right? Zero.
Not a good
number.
But
they're actually a little bit more. I mean, forget about state and local government. Well, can't forget about it, but that's
they're slashing jobs.
It's a slow bleed, okay? That's not going to bring us down. The private jobs, though, were 62,000 if you add back the striking Verizon workers. So, I mean, we aren't not creating jobs. Actually, I thought you were going to ask about Asia.
We're going to do Asia next.
We're doing very well. I work for a Japanese bank.
Bank of Tokyo-Mitsubishi. All right, so tell us about Asia. We got the reports out of China, manufacturing data, not so great.
Well, I mean, one of the purchasing managers' indexes from that was not so good. The next day, the other purchasing managers' index said things weren't so bad. But the thing about Japan that's interesting is that, number one, it's a safe haven. But even with the yen down at this, high, I mean, at the yen at such a high level, the economy seems to be doing okay, better than people would have thought. You know, that's kind of a trickle-down theory. If exporters get 100 yen for the dollar, it's good. If they get 75 yen, it's not so good. But, just the other night, the unemployment rate came down pretty sharply. So it's not lights out for that economy whatsoever.
So Asia, we should put that in the plus column right now.
Yeah, I think it's still hanging in there, especially China. The growth isn't going to come off that much.
All right, Ward McCarthy, what do you think about Chinese growth? You think it's going to be sustainable?
I think it will be sustainable. I don't think they'd really be able to figure out how to stop it, because they're in a state of the economy that the U.S. was in probably in the 1880s or 1890s. And they're also very concerned about the social aspects of things. The Chinese government's been very sensitive to the Arab Spring, so they want to make sure that they spread the wealth, and the only way they're going to have wealth to spread is to make sure the economy keeps moving.
So, Joe McAlinden, how do we invest for this scenario? Chris Rupkey says Asia, particularly Japan. We put that in the plus column. Ward McCarthy agrees it seems between the two economists all's going to be right with the world.
Well, I think we're going to make a major bottom, in my opinion, in the next couple of weeks. Maybe we made it intraday today, I don't know. But I think it will happen in October. Historically, big market bottoms are made then. But from here up, I think that, you buy low, sell high. Basically, I think that emerging markets are very attractive. U.S. small caps are very attractive. In fixed income, I like high yield, which has gotten very cheap here in the last few days, and emerging markets debt, which also has gotten very cheap after having been kind of rich. So basically the things that went down a lot, I think are all going to go back up over the next 6 to 9 months, assuming the Europeans come together with a plan that provides the short-term funding for Greece and a longer-term solution to the overall debt crisis. And it's doable. They just need to convince the markets that they're going to do it.
Yeah, but the markets have already voted, haven't they? I mean, we were just talking about Dexia earlier, that they're going to split it up into a bad bank and a good bank. And I was just reading during the break that the liabilities of Dexia are 1.5 times the total GDP of Belgium. I mean, how do you make the math work?
Well, Belgium's a small country, and these are global banks. The market, you speak about the market voting. I mean, this was like at a Jimmy Buffett concert with fins left and fins right. They voted one way this morning, and in the last half hour of trading, they voted a completely different way, just based apparently on a comment from an official in Europe. And I think it speaks to how oversold the market is and how risky being short this market is going to be if there's any good news out of Europe.
Get a little bit more from you on high yield. Why high yield markets right now? And for example, there's an exchange traded fund, HYG. Is this also because there's not that much leverage in the system? People don't have the money to borrow.
We were talking about yields on common stocks on the break, and the high yield ETF. I was just looking at it today, frankly, for my retirement account.
Well done.
and with this drop in price, it's yielding 8%, and that's a basket of pretty. So you're minimizing idiosyncratic risk by having this basket of different high yield securities with an average yield of 8% after fees. I think that's pretty good.
What do you think, Chris Rupkey? 8% high yield in your retirement fund?
It sounds good, but the yields are up there for a reason. I mean, I'm a positive person, but if the economy slows dramatically, those companies could.
Now you're giving me the other hand. You are this bullish economist, and now you're telling me about the slowing economy.
That would never happen. In fact, if the payroll jobs number is weak, I'm going to blame it on Hurricane Irene.
Well done. All right, I want to thank you very much.